Good afternoon, actually almost evening. This is Sarah Collins, and I am the Employee Wellbeing Program Manager for Brigham Women Hospital. And I'm so thankful to Harvard University Employee Credit Union for sponsoring and presenting these topics on financial education. So I really want to give my gratitude up to Sarah Scruggs and Migdalia Gomez, and they'll be your presenters today. Thank you for attending with us.
Thank you, Sarah Collins, and thank you everyone for joining us. So as Sarah Collins mentioned, my name is Migdalia Gomez, and I'm going to take us through the first part of today's presentation. Then I'll turn it over to my colleague, Sarah Scruggs, who will close off today's presentation. Before we get started, we'll give you a little bit of information regarding how the presentation will run. We have gone ahead and muted everyone so that it's easier for folks to hear us. However, if you have any questions, which we hope you do, we hope that this can be as engaging as possible. And if there's something that you logged into today's webinar that you have questions about, that we'll be able to help address. So please use the questions panel to submit any questions that you may have. To make sure that it's working, please let us know where are you joining us from. And you can use the questions panel either on the top navigation or on the right-hand side of the screen. It ultimately will depend on how you logged in, but please let us know where are you joining us from. We're going to utilize that as an indicator that you're able to hear us. As I wait for folks to submit where are they joining us from, we also want to let you know that the presentation will be emailed to all of you, and we also will have a recording available later this week, which will be available on that same page which you registered for today's session. And it's great to see, I see some submissions. So folks are joining from Medford. I see some from Boston. Wonderful. So thank you everyone for submitting that. We are the Harvard University Employees Credit Union, and that's a long way of saying that we are a not-for-profit financial institution created for Harvard employees, by Harvard employees, and for all of the affiliated teaching hospitals, which includes BWH. We're the same as a bank, but really we like to think of ourselves as better as a bank because of that not-for-profit mission. We offer the same products, checking, savings accounts, credit cards, etc. But because we're not-for-profit, we're really able to give back to the community by offering lower rates on products that are loans and higher rates on savings. And really one of the biggest things that we're able to do is personal finance education. We believe that a community that is doing well financially benefits all of us. And we provide all of these series for free. We do this for everyone in our community, regardless of membership. And we'll also talk about GreenPath Financial Wellness, which is another service that we pay for and make available to our community for free. We are going to have a couple of other sessions coming up later this week, and then another one next week. You can visit our page, huecu.org/BWH, to register for the upcoming sessions or to view the slides and recordings from previous sessions, and those will be up later this week, the recordings themselves. What are we going to talk about today? So we're going to talk about how credit has been impacted with COVID-19. But before we get into that, we want to make sure that we're all on the same page as to how does credit work. Depending on what country you came from, or your parents' history with credit, or your own personal situation, we may all have different ideas as to how credit works. And also generations. It could be that what happened when our parents were applying for credit for the first time is now very different from what we are experiencing, and could be different from what children will experience in the next couple of years. Credit does change, so we want to be all on the same page. Now, what tends to happen when most of us want to know something, if we wanted to know what is the average temperature in July of a specific country, most of us will probably turn to Google. We go to Google for information, we go to a search engine, and the credit bureaus are sort of that equivalent to lenders. There are three major credit bureaus: Equifax, Experian, and TransUnion, and each of them collect information regarding debt that you may have or have had, information regarding, collection agency, any debt that you have had that you haven't paid. And this is all being collected, and then it's utilized by either FICO or Vantage Score, two independent different companies, to calculate your credit score. And this information is then utilized, your credit report and your credit score, to essentially determine for lenders to determine what amount they're able to lend to you. Sarah Scruggs is going to get into detail regarding the credit score, but I'll touch a little bit about the credit report and something that has changed as of now due to COVID-19. One of those things is that in the past, as you can tell by this URL, you can pull your credit report annually for free once a year from each of the bureaus. You could pull your credit report more than once, but you would have to pay if it was the same credit bureau that you've utilized in the past. But now, because of COVID-19, the credit bureaus have gotten together and they have authorized the pulling of your credit report once a week for free until April 2021. So that is a significant change, and that is something that I highly encourage you to do, especially if you are going to be, or if you anticipate seeking out either a new product, a new loan, a new credit card in the next couple of weeks, next couple of months. You want to make sure you're pulling your credit report. Also, Sarah's going to talk about some options that lenders have provided during this time and how that can change your credit report. So if you're impacted by one of these, you would want to pull your credit report more frequently to make sure that whatever agreement you have with the company is being maintained. And companies sometimes can make mistakes, so it's not intentional, but it's always good for you to look at your credit report. Oftentimes I'll get the question, does this impact my credit score if I pull my credit report? It does not. If you're pulling your credit report for educational purposes, you're the one doing it yourself. It will not impact your credit score negatively. One thing to be mindful of is that when you pull that credit report, you are going to get your credit score, you aren't going to get your credit score for free. If you did want to get that credit score, you would have to pay. I recommend utilizing your financial institution's website. Many institutions will provide your credit score for free. There are apps that will provide your credit score for free. If you are going to utilize an app that is not associated with your financial institution or your credit card company, they may target you with ads. So just be mindful that even though it may be free, the cost of it essentially is that they may be providing your information to marketers, which if you are interested, that's more power to you if you want to go that route. But if you don't want to, you may want to check with your financial institution if they're offering your credit score for free. When you're looking at your credit report, there may be times that you can find a mistake. As I mentioned before, it's just the numbers. It's bound to happen realistically. And many times it really is just that. It's an error that was either done by the person that was providing the information or a computer glitch. So you want to review the information. And if you find a mistake, you have, by law, the credit bureaus have to reply to you within 30 days. The error may not be fixed within those 30 days, but they have to reply. They have to take your dispute into consideration and start the process. This is something that if you need any help with, GreenPath, who I'll talk about shortly, and Sarah will provide additional information, they can also help you with. It's something that you don't have to go through yourself, and I've had to correct errors. It's fairly, I wouldn't say it's easy. It does take a while, but it's not challenging necessarily. It's just there, like anything in life, there are steps that need to be taken. But let's say that you have a situation that in the next couple of weeks, or perhaps in the past couple of weeks, you've had to miss some payments due to COVID-19. If you wanted to, you could also put a statement on your credit report that isn't disputing error, that is separate, but that is something that you can also do if you wanted to provide those that are looking at your credit report, which are typically the underwriters at different companies. If you want to provide them more information, that is something that is available to you. And that is something that you can do directly. Annualcreditreport.com will give you information, or you can contact GreenPath and they'll be able to provide information. And GreenPath, Sarah will give us more details in the next couple of slides as to who they are and how they can help. And I'll turn it over to you, Sarah.
Thank you, Migdalia. So I'm going to talk a little bit about managing your credit score, but kind of a broad overview first, and then going into specifically during COVID-19 and kind of the months that are going to follow the pandemic, and then speak about GreenPath, our financial partner. So just to kind of give you an overview of credit scores. How do credit bureaus come up with these scores? On the next slide, you'll see that there are, like Magdalia said, there are 3 different lenders. So, and they all have different ways of calculating credit scores. A score is really just showing you the consumer credit risk. So what that means is that when lenders are looking to figure out who would I like to lend money to and loan money to, they are trying to look and see if you've had a good history in the past of paying back on your loans. And so that's really important that you pay on your loans on time, and also making sure that you're utilizing that credit as well. So each model of a score can be different. There's FICO and Advantage are the 2 credit scoring models. 90% of the bureaus use the FICO credit score. So if you have, like Magdalia said, a lot of times your credit card company or your financial institution will provide you with a free score. I know for myself, I have Capital One and use them for my credit card, and they provide me with a CreditWise score update every single week. And I make sure to check on it and make sure that there are no errors on that. And so it is good to go back and to look and to make sure that your score is sitting about where you'd like it to be. The most common range for scores is anywhere from 300 to 850. That's a pretty large difference. So with credit scores, the higher the number, the better. We would all love to have an 850 credit score, but like you can see in this kind of aside, you'll see that they're broken up into excellent, I think what mine calls it is excellent, good, fair, and poor. And so you really do want to make sure you keep yourself in that fair to excellent range as much as possible. And during this time, it's really important that you're not only keeping up with your credit score, but also with your credit report, like Magdalia said. And so if you go to the next slide, we can see how FICO actually uses a formula to come up with your credit score, because as like we said, your credit score isn't just a magical number that appears. It is based on numbers and based on your past history. So the 2 largest pieces of the puzzle are amounts owed and your payment history. I'll start with payment history, which is 35% of the calculated puzzle here. And that's making sure that you have paid things on time. That's a pretty large chunk of something that you can definitely control. You can continue to pay things on time and continue to make sure that they're paid on time. And if they're not paid on time, that you can pay them as soon as possible. So that payment history is a huge factor when we're looking at our score. Amount owed. A big rule of thumb for people in the financial industry is that you're not spending over 30% of your credit limit. And so if you have a credit card whose limit is extremely high, try not to spend all the way up to that limit. Try to spend 30% or below of that limit, and that will help that score stay higher. I know sometimes when I go into my CreditWise, it tells me, you know, you spent this much less this week, and so your score has gone up a point. And so you definitely want to make sure that you're keeping your amounts owed as low as possible, and you're not spending just to spend, that you're being able to keep that amount low. And then the rest of the categories make up the other 35% here. And so you'll see the mix of new credit. And new credit is where you open an account with people. So let's say you are wanting to open a credit card. So you open that account, and that's a good thing. It can be 10% part of that score. And then there's the length of credit history. So let's say that I opened my first loan. My only loan was a credit card that I opened last year. But Magdalia, she opened a credit card, had you know, an educational loan and had an auto loan for about 10 to 15 years. it's more obvious that someone would like to lend to Migdalia because they know more about her practices. Even if I've paid everything on time and done all of that good stuff, still 15% of that is making up of, okay, well, she's only had something for a year, so we don't know as much about her credit history. And then credit mix. So there are two types of credit. There is one that is paid the same amount every month. So those are going to be things like a mortgage, a car loan, or a student loan. And then there's going to be revolving credit, which that is credit cards. So you pay something different every month. Having a mix of those two things will help your credit score. So making sure that you do have a good mix of those things. But I tell people quite often, don't just run out there to get all these loans because you think it's going to help your credit score. It's only 10%. So make sure you're being smart about those things. And then we're really diving deep into the impacts of COVID-19 on your credit score. And just some things to think through, I think is really important. So if you've taken advantage of a skip a pay option with your credit card or other loan products that you may have, what I recommend is in 3 to 4 months, grabbing that credit report. Again, they're free weekly until 2021. So grab that credit report and just check in to make sure that it wasn't accidentally reported to your credit bureau that you missed a payment. Because if you're skipping that payment and you've done all of the formalized paperwork, then you should be good to go ahead and skip that payment without an impact on your credit score. So you just want to make sure that it's not showing up on your credit report 3 to 4 months from now. Student loans. If you have a federal student loan during this time, your automatic payments have stopped on those since March and will stop until September 30th of 2020. And so during this time, there should be no effect on your credit score based on not paying money towards your federal student loans. And there's no interest during this time either. So if you are able to pay on your federal student loans, now is a great time to do it. But if you aren't able to and you haven't made any of these payments, that should not show up on your credit score later on. And again, like we said, it takes about 3 to 4 months for things to show up on your credit report. And then if you do have private student loans and you've done something like skip a pay, it also should not show up. But what I want to make clear is that you have to have something formalized with the skip a pay option. If you just decide you don't want to pay for a month, that is going to show up on your credit report. But if you formalized with your lender that I'm not going to be paying something this month because that's an option that they gave you, then it shouldn't be showing up and they shouldn't be reporting that. But like we said, there's human error, there are things that happen. And so you just want to make sure that you have everything in documentation so that you can dispute those errors if they do happen. With a mortgage, same thing. So if you've talked with your lender about options for making sure that you have, you're not paying your full amounts or not paying at all during this time, check and make sure that it's not impacting your credit report later on down the road. And then if you're thinking about applying for new credit, anytime, during this time especially, but anytime, you can always use a credit score simulator. FICO has a great credit score simulator. You can just type that into Google and find a great option by FICO there because this will help you to see, so if I get, let's say, if I get a new credit card, what will my credit score look like after I've applied and they've pulled my credit? A lot of people have questions about what will that hard credit pull or inquiry, what effect will that have on my credit score? And so the credit score simulator is a really great tool that you can use to see what impact that would have on your credit. Because each loan that you apply for is going to have a different impact. And so it's interesting to be able to use this tool before we even apply for these things so that we can make sure that that's within the range that we'd like to keep our score. The credit score simulator isn't going to be a 100% always right predictor, but it's a good guesstimate. It's much better than we could probably do on our own. On the next slide, we talk a little bit about GreenPath. Like Migdalia was saying, GreenPath is free for the HUECU community, which means anyone on this webinar, any of your colleagues, anyone eligible for HUECU membership is a part of our community, as well as anyone in your household. This is free because the credit union pays for it on your behalf. And for us, we want to make sure that our community is getting that one-on-one personal finance so that you're able to be empowered to tackle your own issues and maybe problems that you're having in your financial wellness, or maybe you're, we kind of talk about it like a doctor's appointment. So, you know, there are reasons that you go for a well appointment, a well checkup. Those are important too. So even if you don't feel like you have any issues at this time, it's good to go and talk with somebody about these things. And really what I want to highlight today is about the credit report review. GreenPath has accredited credit counselors, so they know the ins and outs of credit reports, and they're able to sit with you and pull this report. It has no effect on your credit score, and they can go with you through it line by line and talk about these things. And if you have questions about, well, I'm thinking about applying for, you know, a new car loan or a credit card, can you kind of help me see where that would fit in all of this? They'll be happy to do that with you as well. And again, it is free and they have flexible hours. So please don't hesitate to reach out to them. We really want our community to be well in a lot of ways, not only physically and mentally, but also financially well. We think that's an important piece of this puzzle. We also have built a site at HUECU that talks and goes into a little more detail about different financial programs that we're offering during this time. So if there's something that you're needing during this time, whether that be a loan or something of that nature, we would be happy to answer questions about that. And we also have information here about our different, not only financial programs, but also our different different information about the economic impact payment or the stimulus payment as well, which is very important. As we are receiving new money, we want you to make sure you're empowered and ready to do something with that. And then I will also let you know that we do have a blog, and this blog is being updated 2 to 3 times a week with relevant, timely information about finances, but also about how you can get involved in the community, which we think is an important piece of the puzzle as well to being financially well, is that you're getting involved in the community as too. So it is blog.huecu.org. And you can sign up and subscribe to that blog without being a member, without ever even thinking about becoming a member. You're more than welcome to find that information there. And maybe that is your first step in this process, is going on to blogs, learning more for yourself. And maybe that next step after that is calling GreenPath, or you're not ready for that just yet, but you'd like to learn more. A blog is a great place to start. And we're just one of many that are very reputable and have great information for you.